that means we are here live on our YouTube channel, Tackle Trading's Halftime Report, a daily market show where we break down the news, the information, the charts, whatever it is that's on our mind, try to have some fun while we're doing it and give you guys context to what's happening out there across the markets. Today, quite a day, quite frankly. There's a lot going on. Markets are down here pretty precipitously. We're going to look at all the charts, break down the price action, and some major headlines, quite frankly. IMF projections for 2020 and 2021 on the global economy. We're going to look at some of the data and have a discussion about that. More discussions about the reopening theme and, kind of this idea that COVID-19 is kind of picking up a little bit in certain spots around the country, giving the markets some pause. Global tensions between the EU and the US. We will have a discussion around those things. But first off, welcome out everybody. As we get into the analysis, a couple things I like to have everybody do when they pop into the show. Let us know that you're out there. Say hello, say good morning. Halftime crew knows our hashtag is Team Tackle as well. Pop that in there. If you're a veteran, we love you. Come back each and every day like you always do. And if you're brand new to our show, welcome out to Tackle Trading. Make sure you click that subscribe, click the bell, and come back and join us each and every day. Matty, how you doing today, my friend? We've got Matt, we've got Mark, we got Cody. Matt first. How you doing, sir?
Doing good, Tim. Excited to be here with the crew here on a midday week in the halftime report, and a lot to unpack here today. Mark is showing a little bit of teeth, well, at least for one day, but we have seen some changes technically in the market, how it's behaved over the news in the last week and a half. But one down day doesn't make a trend, but we'll break it down.
One red down day obviously does not break the entire trend on the market. There are some charts that are turning over, though, internally within the market. You kind of had that rotation going on there during the month of May and early June, Matt. We talked about it here on the halftime show. Those reopening stocks, the Royal Caribbeans, the Boeings, all that kind of stuff, their charts are looking ugly today. And obviously, you still have a lot of strength in the big tech names and whatnot. So it's kind of a mixed market. I think the S&P here is a reflection of that. You got a tight little narrow range there on the intraday, and you're sitting on the 200 period moving average. Headline, yeah, you're down 2.5%. I don't think we need to get too worked up about this until we get more confirmation on the broad markets, but we're going to break this thing down.
Well, I mean, really quickly on it though, Tim, on Monday, we discussed that specifically about how, kind of the theme coming into the market this week has been, do you trust that, economy reopening up theme with those bullish retracements and, the buy the dip mentality, or do you trust the strength of the market, i.e. those pandemic plays, that were showing breakout potential, or quite frankly, the FANG plays, the blue chip plays, the Facebooks and the Apples, the Microsofts, the Googles, those plays, which one did you trust a little bit more? And I said on Monday that, even though, you have a little bit bigger potential return on those distressed areas of the market, the airlines, the cruise lines, those distressed industrial plays, the energy plays, they were a little bit concerning given the fact that they really didn't confirm coming off those retracements. So I was leaning coming into the strength of the market this week. And, quite frankly, that's kind of where my head is right now. When you're looking at that from a technical perspective, take any random airline you have, take Delta here. You're looking at it from a technical perspective, nice retracement, confirmation, but then it's just kind of showed weakness over the last week. Hasn't been able to really kind of build any momentum off that initial momentum you saw there in earlier to mid-May, off that retracement we saw 2 weeks ago. It's failed to really kind of live up to what the expectation in Delta was. When you're looking at, another area of the market, Carnival Cruise Lines, same type of situation. Now you could point to, any random news event, right? You can point to the COVID-19 concerns that, we've been seeing in the data, and I'm sure we're going to get into that here in a little bit. But that data has been in the market for a little bit now. It does seem like you're seeing this philosophy in the market not really play out, and it's building a lot of concern about that economy reopening up theme. You take cake here. Same type of situation. You're seeing it in the airlines, you're seeing it in the restaurants, you're seeing it in the industrial plays, you're seeing it in the energy plays, you're seeing it in the cruise plays, you're seeing it in the casino plays, you're seeing it really across the board of that economy reopening up theme, where you see that initial surge when we were just seeing the states going into phase one, states going into phase two. The reopening theme was alive and well, and everybody was discounting any type of negative data at that point. Well, the negative data is still here, right? I mean, it's still here. We're still seeing that negative data. It's just that now 3 weeks later, the market's waking up to, another conversation we had in the podcast, another conversation we had in the halftime report on Monday. What is this going to look like economically? Is this going to be that B-shaped recovery? Is it going to be that U-shaped recovery? Are we going to see some type of double dip, W-type formation recovery? And so that discussion being played out 3 weeks ago, the entire market was like V-shaped, V-shaped, V-shaped. The economy's reopening up. I've been shut down for 2.5 months. I'm going to get out there and live my life, right? And what's happened is that built and fostered a mentality in that V-shaped recovery. But what have I been saying since this thing started? We're not going to get a V-shaped recovery.
Yeah,
The
you've been
economic
consistent.
data is too dire to see that V-shaped recovery. And quite frankly, the ultimate variable in the equation is the virus, right?
Mhm.
And anybody who listens to Dr. Fauci, when he's asked the question on absolutely almost anything, he was asked a question the other day on the NFL opening up, and he says, well, the virus is going to set that, right? The virus is going to set that. There's no bubble on the NFL like there is the NBA. You can say the same thing about the V-shaped recovery. Well, that ultimate variable of the virus, that's going to really dictate a lot of this economic recovery. And how many times have I said in the last 3 months, it is impossible to project where this economy is going to be in 6 to 12 months from now. It is impossible. There's too many variables in that. And so over the last week and a half, 2 weeks, what I've been seeing in the data is the market, especially in this specific area of the market, the distressed area of the market, the economy reopening up theme. This area of the market has seen, in my estimation, even though the price hasn't shown tremendous decreases in price like we saw in March, it just has not, it has failed to live up to the hype that a lot of people in the market were expecting. Because once again, I think the longer this goes on, the market wakes up to the economic reality of this situation, and it is not V-shape, it's U-shape at this point.
And another organization, the International Monetary Fund, came out overnight, and they were talking about some of the projections they see for 2020 and 21. Not the only one, by the way. There have been many groups, economists around the world, including the Fed here in the U.S., that have said we're going to have terrible economic data for quite some time, Matt. But the IMF revised projections they just put out even just a month or two ago, I believe. What were the numbers that they said for 2020 and 2021?
First and foremost, let me say this. The IMF, the International Monetary Fund, they have been wrong on every economic projection they have put out there in the last 5 years. They have been wrong. These so-called highly educated, paid analysis that make buku bucks at the IMF, they have been wrong on every single economic projection since 2015. That's number one. And they've been wrong in one capacity. They always get it wrong because they always think it's going to be better than it actually is. I have seen the IMF downgrade global economics for 3 consecutive years. So today, anybody who tracks these types of projections, it shouldn't catch anybody off guard, even though the number is a little bit concerning, right? The IMF came out today and they downgraded global economic output to a grand total of 5%. And that is a big downgrade from the 3% they were projecting even 6 weeks ago. I mean, to the layman out there, a 3% to 5%, they're like, oh, that's not that big of a deal.
A contraction of 5%, right? Not an
expansion. Yeah, a contraction of 5%. Yeah. We're talking about loss of trillions upon trillions of dollars in global growth when you're talking the difference between 3 and 5%. Also, the difference between 3 to 5%, it goes to show you that we're not going to get a V-shaped recovery. You're just not. When unemployment, the labor market goes to the levels it did, PMI numbers go to the levels it did, when GDP levels go to the levels it did, it takes time for economies to really kind of build up in that capacity. Mm-hmm. But what the concerning number was coming out of the IMF, this is the concerning number, and you got to kind of dig into it a little bit. But of the 5% negative growth that they're expecting in 2020, they also downgraded what the recovery was going to be in 2021 as well. But in terms of 2020, emerging markets, the Brazils of the world, the Indias of the world, the Turkeys of the world, the the South Africas of the world, the Vietnams of the world, the Malaysias and Singapores and Thailands, and all of those emerging market economies. They're expected to only contract at about 3% this year, versus advanced economic systems, i.e., China, the US, Europe, Japan, Australia, New Zealand, right? They're expected to see a downgrade of GDP production of -8% growth, which is just an absolutely devastating number. So that came out today. And obviously, I just given the fact that that distressed area of the market didn't play out the way that a lot of participants wanted it to play out over the last week and a half, given that that has kind of fell out, tack on, the news coming out of Florida, that massive outbreak in Florida, massive outbreak, to the point where Connecticut, New Jersey, New York is now shutting down travel from those states, and you have to quarantine from those states. And quite frankly, I don't blame especially those areas for shutting it down. If you're New York and you went through the last 3 months of being in New York, and you now see Florida doing what Florida's doing, and you're like, I don't want to take the risk. So couple that with increasing chatter on the COVID situation, couple that with the IMF, couple that with the distressed area of the market not technically rebounding the way that a lot of participants happen. It was just a recipe for people to be like, all right, I'm going to take my foot off the gas. I'm going to take a little bit of a break, let the market come down, and let's reassess the situation.
This thing with the IMF, though, I do want to stay with that for a second and then move on to COVID. I mean, Marky, this is not the first time we're hearing from big organizations that the economy is going to be terrible. Matt, I tried to do some quick math on the 5%. I think that's about $4 trillion of global contraction, I believe, trillions of dollars, because the global economy based on GDP in 2018 was about 83 trillion, I think. So you're looking at 4 trillion in contraction. Marky, when you hear numbers like this, these projections, and they're just dire. They don't sound great. Terrible economic projections. I mean, what's your read on this right now?
Well, I mean, none of it's new. I mean, that's the thing. I mean, sometimes bulls live in this fantasy that, hey, if we base things and they chase momentum. But there's a phrase that I heard on CNBC, one that I've been using in recent weeks, is bulls don't have real fundamental conviction. They don't really believe that they're getting good value up top, especially new retail traders. Retail traders are buy the dip, buy the dip, buy the dip. But these IMF projections, which are not new, which we've seen out of several different organizations, they paint a really dire picture. It's the phrase I like to use. Bears have all the great arguments because they're based in fundamentals, but bulls have the momentum in the chart. So
for now,
the plain and simple fact is that whether it's India or Australia or Europe or Brazil or the United States, the whole global economy is not running on full cylinders. I mean, an 8%, I mean, what was the total global growth? Minus 4.9% globally. That's an astounding number when you think about it, if you put your mind in January 1 mindset, where we all were on January 1. That midpoint through the year, the IMF would come up and say the global economy is going to contract by 5%. And yet markets are going to be at or near all-time highs. That's outstanding. And I don't think anyone would have guessed that those two things would have simultaneously happened.
That would have been a very impressive prediction. There's no doubt about it. If we were on the prediction podcast back in January, Matt, and somebody could have called this, I would definitely be calling them Nostradamus. This thing with the economics, though, I mean, it goes to the point, Matt, you were bringing up on Monday in our podcast and our show. You just made it here a minute ago as well. It just does paint that longer term dire outlook that the V-shaped recovery is a fantasy. From an economics perspective. Now, the market can still go up, by the way. Nothing about the economics necessarily has to have a short-term impact on stock prices. I know it is today, but we've seen this over the last 3 months. They can completely disconnect and they can completely move in different directions. But I think it does lend more credence to that either U-shape or W-shaped economic projections, Matt, and whatnot. Obviously that strengthens our resolve on that front of it. When I think about the fundamentals here, quite frankly, none of it feels new to me. And I don't know if it's going to impact my short-term trading decisions. My investing decisions have been kind of on pause now for several months because I am worried about the long-term fundamentals. But Matt, if the market spun right back up and started breaking out, we would still buy. And if they sell down and they break down, we're going to start shorting. There's tons of great bear breakdowns today. How do you approach it as a trader today? I
You
mean, what do
approach it with you approach it the same way you approached it on Monday. You approach it with caution. The same way you approach most bullish retracements in the market. You approach it with caution. Remember, bullish retracements, those true technical formations, you have your continuation patterns and you have your traditional reversal patterns. A continuation pattern is a cup and handle, is a high base, is a ascending triangle, is a symmetrical triangle where you wait for the breakout, and then once you get a breakout, you got a higher probability of a potential upward movement in price. Versus on a retracements, on those pullbacks, corrections, however you want to personally categorize them, they would be bullish retracements. On those bullish retracements, you have the ability to pick up assets at a cheaper valuation with a bigger return versus risk ratio, but you don't have the same degree of probability because the markets are going down, 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 whereas you're looking to buy the lack of bearish momentum as it comes into those support levels versus, buying into the momentum of the potential breakout. So, and quite frankly, sometimes retracements take a little bit of time to trigger and start to move, right? Nothing, even though I'm a little bit concerned about the failure of this retracement to really kind of form above those these levels after that initial 1 to 2 day surge. We came off that bounce on the 200-day moving average. It's really kind of failed to continue that. But remember, a failure to continue something does not mean the opposite is going to occur. It still has not broken support. And until the market breaks a support level, you have to continue to trade the pattern. You have to continue to trade the overriding theme. And the overriding theme is still bullish. The overriding trend is still bullish, and the market has yet to break support. And so, yes, it has not materialized the way that maybe some participants wanted to coming out of that 1 to 2 day upward movement in price we had last Monday and Tuesday. It still has not broken support yet. So for me, this is still a bullish situation, even though I do believe one of those areas of the market, i.e. the distressed area of the market, the economy reopening up theme that has been so dominant in the last 4 to 6 weeks, that theme in the market seems to be losing a little bit of its bullish muster. There's no doubt about that. You're seeing it in the economic data. You're seeing it in the behavioral data. You're also seeing it in the technical data that those bullish retracements have failed to materialize, and they are now starting to show a little bit of intraday resistance, form downward movements in price. So yes, in the broad market, you are still bullish. There is no doubt about that. But that one area of the market, and remember, we talked about 4 different areas of the market from a bullish perspective. You had the behavioral themes, which include the economy reopening up themes in those traditional value plays, right? And then you had the blue chip pandemic plays, and the pandemic plays were the Chewy's, Netflix, Wayfair's, Zoom's, Activision, Peloton, Shopify. The blue chip plays were the Facebooks, Apples, Microsoft, Googles, and Amazons. The behavioral value plays were the Carnivals, Cakes, MGMs, American Airlines, Planet Fitness, Pfizer, AT&T, utilities, real estate, and so on and so forth. So that one area of that bullish theme, the behavioral / value play, that does seem to be showing some overall weakness right now versus the pandemic blue chip play right now seems to be where the market is showing its strength.
Well, and we've even seen that rotation actually happening here for several days, if not for the better part of a week, Matt. And the charts like this S&P, it's holding support. Some of the other ones are not. Like you mentioned, the bear breakdowns. There are plenty of bear breakdowns today. And we're going to take a peek at some of those a little bit later in the show. I'm getting a lot of different reasons why, as you read the news, so many times they're just coming up with reasons why they think the markets are selling. And I'm not sure that this is actually the case. But one of them, obviously, today, we read the headline over and over and over again, was the COVID-19 data coming out. Mm-hmm. And I saw a graph, today. Actually, it was on CNBC. I thought it was very, very interesting, where it showed the waves of uptick in certain states. and it showed exactly what's happening across, Georgia, North Carolina, Arizona, Florida that you mentioned that might get travel restrictions from the state of New York, Texas, and California. But then you saw downward moving graphs in COVID-19 data in Illinois, Michigan, Massachusetts, Connecticut, and New York. And so there's this split going on with the COVID-19 data. Marky, I got a simple question for you. Do you think the markets are selling based on this COVID-19 risk? Are they finally waking up to it? And what is your assessment of the risk on the coronavirus right now?
If the market was really worried about COVID-19, it would be at 2,700 today. It would be at 2,600. I really think what today comes, I mean, it's just when valuations get to this upper end where they get stretched, where people make money, I think COVID-19 is used as an excuse. Now, granted, COVID-19 has not gone away. It is still there. It's still going to be this annoying thing in society, in the markets for a long time. Anybody who thinks it's not is just a COVID denier. It's there, it exists. But I really think when you see sell-offs like this, like you saw 2 Thursdays ago, or like you're seeing today, if there was real fear, you'd be at much, much lower levels. Much, much lower levels.
Yeah, Mark, you wouldn't be kissing off 3,000 right there at the 200-day moving average playing defense if there was real fear, and you also want to be down just 2.3%. So,
yeah, I mean,
I
think what it
just
comes
a headline.
down. Yeah, I think it comes down to, the stock market right now reminds me of oil or a commodity. That when valuations get higher, price gets a little high. They don't have real fundamental conviction, and so, they're going to take profits. They're not going to buy. And so these sell-offs, it's going to bring down. I mean, this is what happens when you start to develop a consolidation pattern or a consolidation range. You reach upper levels, people take profit. Any little news story scares people, sends it down, pulls back down, buyers start coming in. This reminds me of how a consolidation pattern trades. So, that's my take on it. I mean, obviously COVID-19 is there. It exists. The quarantine thing out of Connecticut, New Jersey, and New York, where if you are a traveler from certain states, including our dear beloved Utah, you got to quarantine. So if you're in Utah right now, Tim, if you were planning on traveling to New York, you got to quarantine for 14 days.
Mm-hmm.
So those type of headlines, whether it's cases spike or hospitalization spike or quarantine or whatever, this is what happens when there's an ongoing news story. COVID-19 hasn't gone away. There will be days where there's a vaccine or less cases and the market spikes. There will be days like today when it sells off on the news, but there's not real fear here. There's no stat out there on COVID-19 that has me spooked.
No, me either, Mark.
Concerning, troubling.
I said this on Monday, and I said it in the podcast as well. If you wanted to find something positive out of the COVID-19 data, you can find the positive. No doubt about that. Mortality rates improving. Increasing testing is obviously going to see an increasing, total numbers, right? And the US has tested more than any other country around the world, right? You want to find the positive, you can find the positive, even on a day like today where the market's just using the data as a reason to sell off. Mm-hmm. And what I really do believe what's going on here, guys, is it's not new bearish data that we're seeing. We've seen this economic data. We've seen the virus data. It's the failure of a new catalyst more than anything else over the last, week and a half, right? The Fed tried their best on Monday last week to do it, but it really didn't live up to the hype. So you really just haven't had anything come out the last week and a half to be like, yeah, let's go buy. I see this as just a little bit of lack of buying enthusiasm today versus a massive bearish movement. Like I see this really just as bulls sitting on the sidelines a little bit today, waiting for the data to really kind of come out again. But but on the same coin, Mark, if you wanted to look at the negative side of the equation from a COVID situation, you could obviously find that data too. This is really it's almost unprecedented to the point where anybody who wants to focus on positive or negative data out of the COVID, you would be accurate. It's depending on what your perspective is. My perspective is we should wear masks. We should social distance. I've been very clear in the halftime report on that. If you don't want states to shut down, if you don't want corporations to shut down, if you don't want to see the economy come back down, wear a mask, social distance, right? Fauci and the head of the CDC literally said that more times than they can count yesterday during their testimony to Congress. But if you wanted to focus on whatever positive or negative, I personally focus on the positive, right? I am not nearly as personally concerned over myself or my family today as I was 3 months ago, right? And don't get me wrong, I still socially distance. I still try to be socially responsible. I still try to, do everything that our health professionals are recommending that we do as a society. But personally, I'm not nearly as concerned because the data we're seeing is skewing to the younger generations. That's going in line with increased testing and those generations going back out to the workforce. But also the number one thing that we're doing here is we're buying time to get an ultimate solution to this virus. And Cody, what is the ultimate solution to this virus?
Vaccine that's actually gone
It's a
through
vaccine,
four
right?
phase 4 trials, so where we have
There you
enough
go.
data behind it to where the actual solution itself isn't as bad as the cure. And in order to get that, it's going to take years of research, not months.
Yeah, but
Not necessarily. Hold on one sec. They've got 5 vaccines in the cookie right now, Cody.
They do, and
they were very aggressive. I mean, that's not the normal way they do it either. And
no, it's not the normal way. So they do have the ability to do that, but we have to just realize that when you're trying to force, science is a very slow process. The scientific method is a slow process. When you force the speed up of that process, the risk of errors or cut corners increases. So when I say a vaccine that's gone through phase 4 trials, yes, they're one of the vaccines I do know has gone through phase 4 trials, which means that they're using a larger human population in order to actually do that trial. Now, what are the risks or side effects of that particular vaccine, and how does it work? How does it interact? How does it affect the immune system? So those are things that aren't going to be known within a month time frame. They need multiple data points throughout a year to see if there are longer side effects to this particular vaccine. That goes for drugs, that goes for pharmaceuticals, that goes for treatment methods. Anytime there's something that happens, there's always longer term effects that we find out years later.
Okay, you're not talking though about, we're not going to have a vaccine. You're basically saying we're not going to have the perfect solution for years because we're going to have to modify the vaccine.
Yes, that's what I'm saying.
Okay. But even Fauci said we will have some vaccine by 2021, and he still held out hopes that some version of vaccine by the end of 2020. So I am a little bit more personally comfortable with the situation because of the advancements we've had there. But also the number one data point is mortality rate. As the economy is reopening up, the skew is becoming to younger generations, and as such, the mortality rate has been improving vastly. Guys, it was just 3 months ago where everybody was talking about a 3% mortality rate, and we were all worried about dying. We're not really worried about that right now. So if you wanted to focus on the negative data, you certainly could. And the market is saying, okay, we're concerned about Florida. We're concerned about the EU travel ban. We're concerned about this. Yes, that's on one day. But again, on that one day, you didn't break support, right? You're not seeing a limit down day here. You're not breaking trend. You're not breaking pattern. It just is not materialized to the same degree the bulls wanted it to, but because it didn't happen in their specific selfish narcissistic time frame doesn't mean it's not there. It just takes some time to play out. I personally like the data, even though I'm a little concerned. I like the overall data we're getting from a mortality rate perspective, from the skew to younger generations, and just as we open it up, herd immunity as well is starting to build. And I saw recently like 40% of the case laws, you wouldn't even know you had the virus unless you got tested.
That was something I was going to add is the tests that we're seeing a lot more done are antibody and antigen tests. So when you're seeing case number go up, that's not necessarily an active case. So when we're seeing an increase in these numbers, that's also why we're seeing mortality go down. Because our active cases, which are done through a PCR test, are not being done as often as the instant, quick result POC antibody testing. Those tests are showing whether or not you've had it and gotten over it. So what we're seeing is a lot of people had it and never even knew they had it, and they're just being added to the overall case count. And that's also a good thing off of what Matt was saying, is that the mortality rate, as the case number goes up of people that had the virus and the death rate goes down, that's also adjusting the overall lethality of this particular virus. That's all good news. That's being ignored. The virus, I think, is just the easy go-to headline for any red candle these days.
It really
it's
is.
lazy.
It really is.
lazy.
It's lazy analysis.
It
Yeah.
is. It's
Very
lazy
lazy.
analysis. Honestly, I think what's happening here today is you had a little bit of that failure of that retracement to really kind of, work its way out. The bulls got a little impatient. And then you had just some micro data points of, the concern over Florida, but specifically the travel ban from New York, Connecticut, and Jersey, right?
Mhm.
I think that's kind of waking up the market to be like, hey, maybe we will shut down a little bit, not nationally, but states as well as municipalities, as well as corporations. Maybe they're a little bit concerned about that. Maybe that throws a little bit of cold water on the economy reopening up theme. But the IMF projections that came out today were pretty devastating. And I think that had more to do with just the market being like, this is not a V-shaped economic recovery. Let's take our foot off the gas. Let's not hit the brake here. Let's just take our foot off the gas for a second and let the data play out.
Yeah, I'm with you. By the way, the market price action looks very similar on the Dow, the S&P, and the Russell, but I do want to get you guys' take on the NASDAQ, because part of this whole hesitation, the bulls have some exhaustion in here, Matt, and I don't think anybody here, believes that it's a COVID-19 data that's bringing the market down. But the NASDAQ here actually still looks very, very strong. It's not like all charts are breaking down or losing their pivots, Matt, or down at support. NASDAQ still above the moving averages in the trend here. So there's still some relative strength that's been there for a long time. Mark, do you expect that to continue, by the way, that we're going to still see strength in these uptrending stocks when the markets do find themselves on good days? The likes of the Apples, the Facebooks, the Googles, the Amazons are going to lead. What's your read on that, Marky?
It is going to take more than a couple headlines to break the tech trend. Like if you're new to the market and trading for 3 days, you're like, why is Apple down today? Why is Microsoft down today? Because don't stocks go up every day? Of course they don't. We know that. But those trends are relentless. COVID-19 might stop Cheesecake Factory and airlines and cruise ships and might create some bottoming consolidation pattern there. But it's not going to stop tech. You're going to have something else. You're going to have some event, some catalyst, something that stops the tech trend. It's not going to be COVID-19 that stops. In fact, we have seen numerous times in the last 2 months tech rally on COVID-19 days. Now today's a broad
people
market
use more
sell-off.
tech during COVID.
Today is a broad market sell-off, but the tech has been argued, right or wrong. I'm not saying right or wrong. All I care is about what the market thinks. That tech is the store of value, that you can look forward to 2022, 2023, some futuristic make-believe date, and go on earnings on there. So now, whether or not you buy that argument is a whole different conversation. But it is going to take something else to break the tech trend. It won't be COVID. It might be valuation. It might be a long consolidation pattern at top that gives out. Might be the elections. Might be numerous lawsuits. Might be trade war. Might be all kinds of other stuff. It won't be COVID on tech. Something else will break tech.
Well, and you did see some headlines on a couple of tech names in the FANG, by the way, today that I thought were very interesting. I don't know if they're necessarily market movers, but Matt, within the tech, obviously the big leadership is in the FAA and G stocks and Microsoft as well. But give me like Facebook, by the way, they've got boycotts going on their platform. A bunch of big advertisers are coming out and saying that they don't want to support and put money into Facebook until they change their policies. That's not necessarily good. I saw Apple, even the Department of Justice and the Attorney Generals in some states are taking steps towards an antitrust suit against their App Store stuff. Now, Matt, we've seen these headlines in the past. They don't seem to ever shake tech for very long. In fact, don't even move it. But Matt, do you think tech is going to maintain its strength here? Do you think there are risks that could derail this tech trend?
I think if there's a time frame that you could point to in the last month and a half, you got to be a little bit more concerned right now with the overall bullish flavor. You got to be a little hesitant here. It's because the market's waking up. Yeah, I don't believe today is a COVID day. We're not seeing the market perform on a COVID day that like historically we have, right? This more broad based, it seems to be profit taking. It seems to be like a lack of bullish catalyst than it is the bearish catalyst, because I don't think there's anything new out there from a bearish catalyst perspective. It's the same arguments that have been, played out in the last 3 months as well. But what I am seeing from a technical perspective is I am seeing a little bit of slowing momentum. I'm seeing a little bit of weakness on the breakout. You saw that breakout happen really yesterday. It failed to materialize today. That shows you a little bit of a breakdown in the trend and the pattern. Again, it doesn't change the trend, doesn't change the pattern, but it does give you a little bit more of a cautious, a little bit more headwinds coming at you. But until this NASDAQ, actually closes underneath its 20-day moving average, there's nothing really to see here. Yeah, could we consolidate and form a better breakout channel? Absolutely. Is the days over of the NASDAQ just going up, 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 up? I'm not sure. But I am seeing a little bit of hesitation in the trend and the pattern here. And again, hesitation in momentum. And I've said this many, many times in my career, but simply because you have a loss of bullish momentum does not mean you have bearish momentum. And I think that's what we got to focus on today. Yes, the market is losing a little bit of its bullish momentum. There is no doubt about that. Those bullish retracements in the distressed areas of the market failed to materialize in the short term. The breakout in the NASDAQ yesterday, it has not had follow through here today. So when you're looking at this, yes, you are seeing a little bit of slowing momentum from the bullish mentality. But until the market breaks 3,000, gets underneath that 200-day moving average in the S&P, until the NASDAQ closes underneath the 20-day moving average for the first time since the initial outbreak happened in March, for goodness sake, then yeah, it's just a day that we're going to be like, okay, profit taking, loss of momentum, let's reestablish those trends and patterns.
And while we're looking at tech, though, Matt, I think it would be interesting. Just quickly flash through the FANG stocks, those big five, if you can, because I was looking through them as you were talking.
You want me to talk about the entire market then? Because that's what the entire market is.
That feels like they are like 25%.
I mean, honestly, when you're analyzing the NASDAQ and the S&P in today's environment, not necessarily the Dow or the Russell, but when you're analyzing the NASDAQ and the S&P, it's like, well, I mean, you might as well just be talking Apple, Amazon, Google, Facebook, Microsoft, and so on and so forth. But, these are part of those plays that we've been seeing, the difference between, and quite frankly, guys, we break it down based on, the economy reopening up themes and the pandemic themes. But the longer this goes on, guys, the more it just comes down to me, growth versus value. I mean, truly, that's where it kind of comes down to me. In the last 3 months, you've had a growth environment. Does that shift more to value? But when you're looking at those themes, obviously the FANG stocks have been leaders in this market recovery. Just in the last since the bottom prices, the S&P year to date, the S&P I think is down about 3% year to date, right? Amazon, guys, Amazon is up 50% year to date. Amazon is up 50% year to date. When you're looking at S&P down 3%, Microsoft up, 29% year to date. Mm-hmm. Facebook up a rock solid 19% year to date. Google up 10% here year to date. And then obviously Apple, I believe, is up, quite healthy as well. So this is the true strength of the market. Even though sometimes you'll see those pandemic plays go hog wild, this is the true strength of the market. And until you start to see overall weakness, and this is just my opinion, but until you start to see weakness in these stocks, you're not going to see big time weakness in the market. The market is not going to show its bearish teeth with Apple breaking out of 350. The market's not going to show its bearish teeth, in my opinion, as long as Facebook remains in its channel. Obviously down 2.74% here today, a little bit of a failed breakout, but you wouldn't exactly call that a bearish trend. Until Microsoft starts to show some weakness, you're just not going to see that ultimate bearish argument come to fruition, as long as these stocks, which are so top heavy in the market, until they start to see some weakness. And quite frankly, guys, it's amazing we have to even talk about this, in tackle trading, but we have a lot of new members. I'm not speaking to our veterans out there. To the new members, markets don't just go up. And on a day when they go down, it doesn't mean it's the bearish, the bears are coming in and everything's going to die and everything's going to go down and the end of the world is happening. It is one day, and you're still seeing strength at the top of the market. You're still seeing strength in the NASDAQ, and the S&P is still holding its 3,000 level. When those key levels are broken in the NASDAQ and the S&P, when you show true weakness in these FANG stocks, then we can have a very important conversation about protecting those portfolios, because the ultimate bear might be coming. But until that happens, you got to trust your eyes and you got to trust support and trends.
Yeah. Stocks are down here today on presumptions of the risk that we're seeing through the headline risk news media has been putting out there on COVID-19 reopening. Another one of the headlines I saw, Matt.
Real quick, just that, and we can move on. Will you pull a Facebook chart real quick?
Sure.
This is always my fear gauge, is that you come down to a moving average and you bounce to the penny off Facebook's 20. So it's always my fear gauge on days like this. When you're coming down to moving averages, did you come down to the moving average and bounce cleanly? i.e. algos coming in, buying without excessive pressure. I'm seeing it on Carnival on the 50-day. I'm seeing it on Facebook on the 20-day. Clean bounces. Not saying that's an indication that of the future, but what it does tell me with 100% certainty that today, at least, it's not real fear. It's a good old-fashioned garden variety sell-off.
Mm-hmm. Yeah, and when those things hold up here, even on like in the middle of the day here, Mark, obviously it's going to give you a little bit more resolve. And I know you watch moving average specifically, not just on one time frame, but others as well. And you're right. I mean, there's no volume pickup here as well. You want to talk about a fear gauge, Mark? One I always look at is the volume. The sell-off today does not have massive amounts of volume in this marketplace right now. Just we're down a couple percent. And Matt, you're right.
Well,
Markets don't always go up.
Tim. It's not just that. And it's like Lewis makes a point, look at the weakness we're seeing in the FANG stocks today. Absolutely. 100% agree with that. One day is nothing though to me. Not when the market held support, not when a trend was not violated, but especially not when not one support level was broken. Yes, on Facebook, the breakout of 240 failed to materialize, but it's not like it ultimately broke that, that ultimate support level right here at 225 on Facebook. With Apple down quite healthy today, down 1% today, but it's a doji candle. Like literally it's a doji candle that didn't even touch support. Microsoft here today, failed breakout of the $200 level, but it's still above its, 90 MA. And from an intraday perspective, is starting to recover from an intraday perspective, starting to show a little bit of strength over the last 60 minutes or so from an intraday perspective. Amazon, AMZN showing a little bit of overall weakness here today, no doubt about it, down 0.5%, but it's forming a high base after 50% upward movement in price over the last 3-4 months. So yeah, I get it. The headlines are bearish, right? COVID-19 outbreaks, New York shutting down travel to Florida, EU thinking about restrictions on travel ban, America thinking about $3 billion in tariffs on the EU, China, big bad, bad person. Oh my, I get it. The news headlines are bearish. The market performance is bearish today. But again, until we see weakness, true weakness, i.e. supports being violated and trends changing and patterns being broken. The reason I'm a little bit, more bearish on those distressed areas of the market, like the airlines, like the cruise lines, like the restaurant reopening plays, it's not just simply because the data is no different today, in my opinion, than what we saw a week ago or 3 weeks ago or 4 weeks ago. At what point have we ever been in the halftime report and been like, yeah, these airlines are a great investment right now that are primed to make a ton of money over the course of the next 5 years, right?
Never. In fact, the other day we went off on United Airlines.
Never.
Yeah.
So there's nothing in my opinion that's new. The reason that I'm a little hesitant on this reopening play, and the reason I was a little hesitant on Monday on the reopening play, is these trends and patterns failed to materialize. That's why. It has nothing to do with the fundamental situation. It has nothing to do with the behavioral situation. It has literally nothing to do with anything that happens politically. We saw these retracements show a little bit of weakness. They failed to materialize, but we haven't seen that in the feigned place. We haven't seen that in the pandemic place. We need to see, if for true bears to take hold, guys, every one of these bullish themes get destroyed in the short term. Every single one of them do. And right now, the only one that is the economy reopening up thing.
No, I mean, one of the things that this is why technical analysis is so amazing. Like all, these airlines and Boeing, like, I mean, go back and look at Boeing. Boeing, when it had its massive run up, coincided with a very long multi-week channel where it traded sideways and then started to clear all of the daily moving averages. And then you were getting good old-fashioned technical signals when Boeing broke out. You didn't have to guess when it was going to shift. You didn't have to I'm going to speculate in all of that. You got a clear technical signal. Consolidation pattern, cleared the 50-day moving average, broke out of resistance, and then it went crazy. Like, so often we get so impulsive and we're like, I got to do something today. Wait for the technical pattern to emerge. I mean, sometimes it will take weeks, sometimes it takes months. But those that are patient and then aggressive when the pattern emerges, they can get really big paydays like people did on Boeing when it produced that technical signal.
I don't remember which book I read it from, but someone said that trading in the markets is 20% analysis and 80% patience. And I think that's absolutely true. There's so many people who can see the chart and they're like, oh my God, it's working. And they jump the gun and then the pattern doesn't play out and they get burned.
But that's a learned skill though, right, Cody? I mean, you and I were talking earlier, you had a really good insight actually into your own journey and your own growth here, because the first thing you said, I pop in for a pre-production, we're getting ready for the show and everything. You said, man, I used to get all stressed about days like today. And I'm paraphrasing you. You can clarify exactly what you meant. But then you're like, but I've learned to not overthink them. And part of that patience that you're talking about, that does take time and experience. That's why you can't just instantly become a great trader just because you want to get somebody gives you a pick or something. You actually have to learn this stuff, right, Cody?
Yeah, and that's definitely true. And basically what I was getting at is one down day and everything that we've covered so far is that not, the technicals haven't broken down the market. The market's still showing that basing pattern, that high base. Just because we had one down day, I don't necessarily get freaked out because it was one red candle that may have covered 2 or 3 days worth of upward movement. Knowing that the pattern is still there and controlling your risk, because that's something else, is that being able to control your risk throughout your portfolio and throughout your trades. If you do that, then you shouldn't be worried about any red days, because if you know the risk before you get into any particular trade, then the emotion should be taken out of it. The market's going to do whatever it's going to do. It is your job to assess a trade, to assess your portfolio and say, I'm willing to risk this much to see that my bias and the technical analysis that I'm seeing is right. And if it works, great. I will take profit and I'll look for the next trade. If it doesn't work, okay, that one didn't play out, still within my rules, still within my risk, look for the next trade. One down day, regardless of how big it is, if you've controlled your risk, should not scare you by any means. If you capitulate at every single time the market isn't doing exactly what you want to, you're going to constantly start locking in losses rather than locking in profits on a down day. The support's still holding, and Mark even pointed out that it went right down to the moving average and popped back up. People who started freaking out probably sold down there at that moving average, and they ended up, being the bag holder at the bottom. Right at the bottom of that wick, there were people who sold Facebook before it then popped back up almost half its down of its losses today. Don't capitulate based off of one down day. Don't let your emotions get ahead of your trading plan, your trading skill. Being able to actually control those emotions does take time. And in order to really get that, I would say start with controlling your risk. Profits will come with the plan. You control the risk. If you were to eliminate your top 3 bad trades where it went past your risk, if you could eliminate those this year, where would your portfolios be?
Oh, I've seen it I've been mentoring students, Matt and Mark and Cody, forever, like you guys have as well. And I've seen it forever. If people can eliminate massive losses on things they just kind of bag hold on, they get stubborn with, and they refuse to get rid of, or Cody, they even double up when they're losing, dollar cost averaging, stuff like that. They over position size. If most traders could just embrace what you just talked about through their education and through understanding risk management and position sizing, and actually get rid of trades when they're truly violating their trading plan and just dump the losses and do that.
Let's have that conversation, because I thought what Cody said was very well spoken, but let's have that conversation. Okay.
Mm-hmm.
Because yes, talking about it theoretically, nobody's going to disagree with anything Cody said. Nobody is.
Yep.
But it still takes a fairly deeper skill set to make that decision, right?
Yeah.
Okay. So one down day on Facebook doesn't break a trend, doesn't break a pattern, right? A doji on Apple. If anybody's freaking out over Apple, they should stop trading and literally just go find somewhere else to make money. Can we agree with that?
100%. Yeah.
Okay. Google, taking the strength of the market. Google has not yet confirmed the breakout. Who cares about a down day? It hasn't confirmed that breakout. Microsoft here. Microsoft confirmed yesterday, failed to materialize today, has not broken the trend, has not broken the pattern. Shouldn't
Wake
be
me
freaking
up
out
when
yet.
Microsoft actually closes below the 20-day moving average.
Same thing with Apple, same thing with the NASDAQ, right? I mean, same analysis. Wake me up when the 20-period moving average is violated on those. But you take a company like Boeing, you know, one of those areas of the market, distressed area of the market, economy reopening up theme, very similar to what we saw in the airlines in general, in the cruise lines, in the energy plays, in the industrial plays. All right. So here's that bullish retracement. Higher high, higher low. Starts to drive. How many days does it take to create a pivot in the market?
3.
At least
It takes 3 days.
Yep.
Okay. So it takes 3 days. Upward movement in price, 3 days. Downward movement. This, to me, is substantially different in the economy reopening plays than what we're seeing in Apple or Facebook or Microsoft or specifically Amazon, right? So because this pivot failed, and now you're seeing intraday bearish data, and now you're seeing, break this down on a 30-minute chart, you're saying there's the recovery, there's the pivot, here's the failure of it, here's the violation of intraday support at 183. So yes, one day does not make anything, but a failed pivot after 3 days upward movement in price off a bullish retracement, you got to recognize that weakness. You have to, because if you don't recognize that weakness, and anything can happen, Boeing still has its ultimate support level at 170. But if you fail to recognize that weakness in the time frame, you are the bag holder when it ultimately does come back down to 130.
Sure.
So that's what I'm talking about in this one specific area of the market, the distressed area of the market. That to me is the one area of the market I'm a little concerned about right now. Now, Boeing ultimately has not violated its 170 support level. Delta Airlines, very similar type play as the Boeing, 3 upward days, downward movement in price, literally kissing off that 27 handle, which is the ultimate support level. So you take a look at these airlines, and again, Delta, analyze whatever one you want to analyze, right? But when you're looking at that failed pivot, upward movement in price, downward movement. So yes, one day does not make a change in trend, but a 3-day pivot off a bullish retracement should give you a little bit of hesitation here in that distressed area of the market. I said this on Monday. You should approach the distressed area of the market with ultimate caution, and you should approach most retracements like that, because retracements are a slowing momentum technical pattern. Breakouts are an increasing momentum technical pattern. So in retracements in general, you should be a little bit more hesitant, a little bit more cautious. Maybe think about scaling in, add a third of the position, add another third as it starts to build its momentum, add an ultimate third when it ultimately breaks resistance levels. But you might want to scale in. You might want to do something from a spread perspective, like a bull call spread, or instead of just going straight speculation like a call option, you should treat retracements in general a little bit more cautious, especially in this market. This retracement that we saw in the distressed area of the market at least over the last week, has not failed to has not materialized the way that you wanted to see from a technical perspective.
And I think disciplined traders with experience, rules and all that kind of stuff, they're more likely to just fulfill their trading plan, Matt. If you do get a breakdown and it does hit your stop loss, a disciplined trader gets out of it. They trust the analysis, they trust what they see. But even like I see a lot of newbie traders that don't. They start ignoring the technicals, or they start doubling up and all that kind of stuff. And I think these are really, really good conversations here. And I love your input, Cody. And I love your analysis there, Matt. I do want to unpack a couple other major news stories here today.
Just one thing on the distress charts.
Sure.
Listen, there is nothing in life other than the health of my children that I want more than 100 shares of Boeing at a good price. But whether it's Boeing or Delta or anything else, those short-term charts are a mess from a bullish perspective.
They are.
You're caught between layers of 8 hours and 4 hours and 2 hour and 1 hour moving averages. You're breaking below 20. They are a total mess. If you buy anything distressed, you better not be trading it, because the technicals are a disaster. You better be holding it for the next billion years. All of the technicals point towards lower price. Now, of course, with that said, we're going to get vaccine news tomorrow, right? That comes out.
Yeah, Q Fed announcement Friday morning.
QJ Powell, Q Mnuchin, Q Kudlow, they're all huddling together around the
PPP
campfire
coming
right
out,
now.
distressed area. Yep.
Is there like a bat signal for the Fed? Anytime the market's down, they just flash it
up. Signal. We went over this. It's a big dove. Okay, it shines in the sky, and it says Fed members come out and give some dovish policy right now. Some dovish language.
If you are excited about Delta or Cruise Lines or MGM or Cheesecake Factory or Boeing or what's that one that just been getting killed lately? Oh, who hasn't been getting killed? Spirit Aero Systems, which is on my radar. Patience, Grasshopper. Wait for the technicals to give you a signal. It might take 6 weeks for that to happen. It might take 2 weeks. We don't know how the technicals play out. They're a mess today. Tech, they're great. Tech, they're amazing. Pullbacks, definitely in order if you get that nice pattern. But the distressed areas, be patient on this one. Lots of negativity. I'm not talking from COVID, from a technical point of view. They're really, really messy. Wait for that pattern to develop before jumping in.
Right or wrong, Mark and I's FOMO on Boeing are there.
Oh, Tim and I sit around every morning
and we
contemplate
I don't know where to
get
buy
100 shares of Boeing. We know we can at these levels because the technicals are a disaster.
You can't just buy the equity. No, it's a terrible trade. Yeah.
Even if they went up tomorrow, it's dumb today because the technical signals. I mean, you could have a close below the 20-day moving average. If you get confirmation on that, it can be a quick trip to the 50-day moving average. We know this from technical analysis. So you got a little moving average gap between the 20 and 50. That can fill really quick. Wait for a pattern. Just patience. I know it's hard. It's hard. One day I'll have 100 shares of Boeing, hopefully. But I will wait until I get the price level or the technical confirmation to do that.
And that's the
approach. I don't think that. I also don't think that happens on a day chart when you're looking at swing trading projections. I think that happens on weekly charts.
And it might take some time. I mean, the last consolidation on Boeing, Matt, when the technicals kind of broke down a little bit, it consolidated for 6 weeks. So
that's what I'm seeing in the distressed areas, T. I'm seeing these retracements very similar to this this reversal pattern. It failed to materialize, and then you just had this fade action until you started seeing the pop. So, I'm with you, Mark. The technicals are really weak on these distressed areas of the market, and quite frankly, the only traders still holding are people holding the bag right now, saying, "Okay, I hope it goes back up, and I hope I recover the loss on those call options." There's no re-entry here on the distressed areas of the market. Now, Boeing ultimately has not violated its support level right there at 160, 166, 165, a close underneath the 20-day moving average. But in the short term, the last week has broken the technicals on these distressed areas in the market. And that's my entire analysis. It is not based on what you're seeing in the headlines. It's based on the weakness we're seeing from a technical perspective on these retracements that have just simply failed to materialize.
And I just want to address Jeremy's question in chat, because this is for individuals that use covered calls, which I do. It's a great question, Jeremy. Situation I've been in. I know exactly where you're coming in. He's like, all right, so if there's technical weakness, do I sell calls? Where do I sell them at? Do I sell them at a strike above? Let's say I bought and I'm stuck and I'm down. Do I sell calls at my break even or at a delta rule in order to reduce my cost basis? Now, reducing cost basis is the only thing I live to do in my investment. How do I reduce cost basis on my existing investments? So if you sell calls, which you can get a huge juicy premium, if you sell calls at your break even point, you are reducing cost basis. You do have to live with the consequence, because this is what happens. Boeing vaccine news comes out tomorrow, right? And Boeing rallies big and you're like, no, I got to take my call off. You got to, how are you going to manage it in all situations is the advice I'd give. I love reducing cost basis. It's the only thing I care about really in the market is reducing cost basis.
You know, and Matt, you brought up
But
the
do
tackle
know that if you have the big update, I mean, you got to stick with your plan and play it out no matter what happens in the next 2 weeks.
I love it, Mark. And I'm with you on that. I mean, if you're a long-term investor doing cover calls, you have to learn to manage all three conditions. If it goes up, and if you're going to need to be rolling to make sure you don't get your stock taken away from you. If it goes nowhere and you just want to keep picking up cash flow, you got to learn how to manage that. And Matt, module 6 there on the Tackle 25 system. And I don't know if you've taken that or not, Jeremy, but strong recommendation. If you're a cover call trader, go through this little course. You know, we put it out there a couple of years ago. It is all about how to build them, how to manage them. It gives you a lot of actionable ideas. And yeah, if things do break down and you own equity, you have to know where to sell that call, how to sell that call, and then how to manage that call as well. So definitely would make sure that you check out that Tackle 25. Guys, I want to unpack some other news here, guys. And I do want to talk about Europe for a second. Now, bring up FEZ. It's just an ETF that tracks the European FTSE 50, I believe, or something like that. Europe today and overnight, there was a couple of headlines that I actually think might be something at some point. Now, the one, not necessarily, I mean, a tariff threat out of Trump, I believe, in the administration, Matt. I didn't exactly get all the detail. I saw $3.1 billion tariff. I don't know what goods they were on and what countries. You might have that information that I don't. But the one I actually am more interested in is this idea of potential travel restrictions. There were many countries and many governments that said, even when they start relaxing guidelines, they may not let airplanes come from the U.S. To Europe, Matt, without quarantining and all that kind of stuff. That storyline, in my opinion, is not just going to be a European storyline. If the U.S. outbreak and COVID data stays elevated, I think you're going to see that globally for some time. Mark, what's your personal read on the risk here with any of this European headline stuff? You first.
Like the market got a quadruple just slammed to the face today. You got the news. It wasn't just the COVID spikes. It was the real COVID news that impacts the market. I mean, right or wrong, isn't cases, isn't mortality rate, isn't hospitalizations. It's how do governments and how do municipalities react to the COVID situation? That's what the market's really concerned with. And so when you had New York, Connecticut, and New Jersey issue quarantine orders, when you have Europe saying, basically haven't announced it yet, but this is all the scuttlebutt, that they're going to open up their borders. Americans, sorry, you're not welcome in quite yet. You're not welcome in quite yet. And so this restriction of travel, this restriction of a return to normalcy, as long as these things exist, this is what the market's really concerned about. And this is what could cause, if you see a trend in those things. For example, Germany had this huge outbreak in one of their meat processing plants, and they had to close down a city, an area, schools, businesses, everything, in order to contain the virus within that area. So if you start seeing Houston or Phoenix or Miami do these things, market's not going to like that. Market's not going to like that along. So if you see a trend in quarantines and in border closings and in cities shutting down, because you're not going to see a nationwide one again, right? But if you start seeing areas and pockets of the world and in the United States closed down, market's not going to like that at all, because that slows down the economic recovery. It weighs on already tenuous market sentiment. So those are the things to focus. Oh yeah, with Europe also, let's throw in a potential trade war. Yeah, I mean, it's not. It was.
I
It
don't
was
know.
just.
The tariff stuff and the trade war stuff, honestly, and I might be the only one with this opinion on that. I actually think it's just noise. I don't believe it. I don't think we're going to spin into
It
a
always
trade
has
war.
been, hasn't it?
I mean, I don't believe that is going to spin out of control personally. I think the travel restriction stuff is much more concerning to the market. And obviously nobody wants to see tariffs and trade wars and all that kind of stuff. But do you guys really think Trump is going to start a trade war with
No, I mean,
Europe?
It doesn't matter what Trump does. It does not matter what Trump does in this capacity. He can say whatever he wants from a trade perspective. There is not one world leader in the world today that is going to justify doing anything from a trade 4 months before an election that Trump's down by over 10 points nationally.
Mm-hmm.
It's all noise till after the election
Mm-hmm.
from a trade perspective.
Speaking of the polling on that, Matt, do you think the market has any risk because
to answer
of
your
that?
question, zero, none, zero. It's the most idiotic hot take that could actually be out there.
Oh, the talking heads today were all over that, and I'm just like,
The talking heads talk. It has absolutely nothing to do with the market performance today.
Yeah, I'm with you. I'm with you. So this Europe thing, Matt, though, the tariffs, I don't think they're a big deal. I mean, what about the travel restrictions, Matt? I mean, obviously, just more information on that.
That's the information that I think is giving this market, and especially that economy reopening up theme, a little bit of heartburn here today. Because that is increasingly new information, right? The virus, the expansion of the virus in the last 3 weeks, that's not new. I mean, we've been seeing that across the board, right? And again, you can find pros and negatives about it. I personally, like to look at it as glass half full. It's kind of how I personally look at it. Like I said, I'm not nearly as, concerned personally as I once was. But we've talked about this a little bit in the last couple of weeks. Yeah, I don't think anybody here believes that we will see a national shutdown again, right? And that's what a lot of this economy reopening up theme, this distressed area, the market theme, was really kind of built on, is that we shut down once. We're not going to shut down again. We're going to reopen, and we're going to have a V-shaped economic recovery as we massively reopen. I think the one thing that a lot of people, including us, initially failed to understand in that is, the federal government's not going to shut down, but that does not mean states won't issue certain guidelines. That doesn't mean municipalities won't. That doesn't mean, corporations like Apple and Starbucks from last week won't. That doesn't mean Europe won't. And so I think, one thing the market is waking up to, specifically on the economy reopening up theme, is can the economy still, struggle to reopen if we start to see corporations, states, and municipalities and other nations, start to take more aggressive action, specifically against the U.S. So that is a little bit of a cold water on the bullish theme right now.
Yeah, and that struggling to reopening is not just going to affect potentially markets here in stocks, Matt, but also crude oil. Take a peek at crude oil. Let's work through some of these commodities as well as we're having these discussions. Kind of a failed breakout in some regards, but also hitting that moving average. Matt, what are you seeing in the chart first?
No, it absolutely is a failed breakout. There's no other way to point to it at this point. You closed above 40 here on Monday. You confirmed with the trigger above that high on Tuesday, and then you violated the 40 handle and came back down into support. You have to call that a failed breakout at this point. Doesn't mean it's not going to reestablish and make another move. No, that's not what it means. But it does mean that it throws off that trigger at 40, because now you have a lot of intraday data above that 40 handle that you got to be a little concerned about. Above 40 here, if you trigger here, well, what about 40.50? What about 41.20? What about 41.60? And so there's a little bit of concern with today. The failed breakout yesterday on crude and coming back. Couple that with things we have talked about in recent history about the slowing momentum we saw in the trend, the consolidation. But I'd like the breakout of 40. I don't regret the breakout of 40. But yeah, it has failed. And most likely, if you triggered either on the aggressive breakout of 40 or on the conservative on a swing trade, you're probably stopped out today.
Yeah. And that support, where is support right there, that pivot? Is that 35, exactly where that
this
pivot
support,
is?
no, it's right there at 35.
Yeah.
35 is ultimately, you're not bearish on oil unless it breaks 35, right?
Yeah, I would agree.
But you're also a little hesitant on the breakout now that you did fail one time on that breakout, because again, it's not just the failure of the breakout. It's the fact now that you have all these intraday levels of resistance that is just going to cause a lot of those triggers to be thrown off.
Throws a lot of the chart off. By the way,
Yeah, the one thing that scares the hell out of me on oil is if you close below that 20, which you haven't done in a gazillion years on oil, that's a big moving average pocket down to the 50. And there's just all it takes is a spark. You know, one negative headline out of Russia, one negative worry about storage, and the storage issue still hasn't 100% gone away. And
there was a build today in supply, Mark,
so that hasn't gone. And so like all it takes is a spark, and you close below that 20.
Did we get EIA numbers today?
Yeah, 1.4 million came in against 1.2 expected. So they built again, Matt. Supply built
2 weeks in a row.
2 weeks. Production also upticked, and the distillates also had a build, which is your jet fuel and so forth. Wasn't a great report. Wasn't like this nightmarish report, right? But it wasn't a good report either. But if you get a spark and you're below that 20, that could be a real quick fall.
Well, and you know, one data point economically, almost everybody, it'll have an intraday impact, but most people, market participants, Wall Street, so on and so forth, they kind of bypass one data point. They need to see multiple data points, and crude has been driving up for a couple reasons. Number one, the shutdown of supply, correct, Mark? I mean, rig counts
have been obliterated in this country.
Just the shutdown of supply and the buildup, in terms of the economy reopening up, people traveling more, corporations traveling more, so the economy reopening up theme, and then just the absolute shutdown of oil production. 2 weeks in a row, couple that with slowing momentum and trend, couple that with the failed breakout of 40, and couple that with some initial talk that Russia might be opening up the pipelines a little bit. It gives you a little bit more caution, on crude oil than you otherwise would have been, even as early as earlier this week.
Yeah, I think you have to be more cautious and potentially even, setting up some bearish trades if you do get a breakdown below that 35, Matt. I'm with Mark in some ways. If I was going to look at one area of the market on weakness, a lot of these energy companies are reopening theme type companies. Their charts are not looking great as the XLE is coming down here, but obviously not enough data yet to start calling that. Just one day, here today.
No, and in between 40 and 35, Tim, you're not doing anything, right? Yeah. Mark and the cash flow traders going to lob their grenades, right? The naked puts and the bull puts underneath. No doubt about that. More advanced, aggressive traders might be doing bear calls and naked calls or strangles or whatnot. In these environments, the cash flow kings, they'll come out there and they'll figure out a way to cash flow on it. No doubt about that. But from a directional perspective, at this point, again, the failed breakout, it gives me concern, not just because of the failed breakout. It also gives me concern that it's really hard at this point to map out a good return versus risk with a probable setup where you need to put entries versus where you need to put stop losses right now. You break underneath 30, 35 though, K-trade type setup, you break underneath 35, I could definitely sign up for a target of 32.5 by 30.
Mm-hmm. Gold and the dollar next, Matt. Then we still got quite a few companies I want to talk about here today. A lot to unpack here today. I know it's a lot of themes in the market, things that are happening. Stock prices down a little bit. Gold went up almost touch 1,800 there, Matt. 1,796 on the intraday on the futures pricing. I'm not changing any of my assessment, my position, not doing anything different with my gold stuff. Any read on that chart there, Matt? Hitting near that 1,800 mark.
No, I laid out my analysis on Monday people should know where my take is on gold. I'm seeing this as a short-term breakout. I'm seeing it as a long-term fundamental opportunity. Gold is my favorite tradable instrument right now. It does so much for a portfolio. Protects against economic calamity, protects against ultimate central bank nonsense, i.e. inflation. And technically you're seeing a really, really strong breakout. Fundamentally, you're seeing central banks and governments starting to hoard gold. So it is my favorite tradable instrument. I love that this shiny, precious little metal doesn't move like a girl's stock, so you don't have to get heartburn on a daily basis. A big red candle, scary candle, down down literally 1/3% here today. I like the breakout. You got to trust the breakout as long as it stays above 1760. At this point, you're adding to a portfolio, in my opinion.
I think even if you are looking for like momentum position trading, things like that, where you started with a smaller, like let's say scaling in 1/3 or something like that, I would add to it above 1800, Matt. I would have no problem playing the momentum above that, because I do think those round numbers on gold, people do pay attention to them in some regards. To me,
Honestly, Tim,
yeah,
there's times technically where you see a trigger that you should add. I thought that trigger was on Monday, but but honestly, from a technical perspective, you're really just trying to maximize your results. At this point, I think the evidence is overwhelming that everybody should have, at a minimum, paper gold in a portfolio as a hedge and a protection. But I am a strong advocate in this environment of actually owning physical metals as well.
yeah. Last one on the big picture stuff here, the dollar, if you can. There's two storylines that I think are interesting surrounding the overall dollar analysis. One of them is more implications of a phase 4 stimulus that is going to be coming soon. President Trump has been talking about how he does want to get something done. Senate Republicans have been very hesitant about extending the $600 a week in unemployment and some of the other stuff from the CARES Act. Guys, those benefits end in July, the end of July, in terms of that extra little money to workers who are displaced right now. And by the way, Matt, there's still 20 million people unemployed in this country. That's not gone away. That has not gone away yet. The second headline has been, and Mark, I don't even know how to unpack this one because it's hard for me to really figure out what these numbers represent. Matt, there's this idea that funds, specifically mutual funds and municipality funds and pension funds, that they have to sell stocks by the end of June, about $50 billion worth of them, to rebalance their portfolios, because they can only have a certain percentage of their money in the stock market relative to what they have in bonds and cash. Either one of those headlines, Mark, actually mean something to you? Do you think that those things are real?
Well, yeah, I mean, pension rebalancing is a real thing that happens every quarter. And when you have a stock market that goes up as much as it did this last quarter, that natural rebalancing that occurs. And, I've seen all kinds of estimates from, 40 billion to 100 billion. I mean, people are doing a little bit of guesswork there. What it means on the ebb and flow, because over the next week, it's really hard to say. I mean, goodness gracious, like we don't have enough headlines to try to analyze why the
I think it's
market's
just
going
guessing.
down.
I read it and I understand it, and I get it. $50 billion is a lot of cash in that regard. But Matt, the markets move hundreds of billions of dollars every single day. These
Wall
funds.
Street's got to find somewhere to put the $2.3 trillion that they've been donated from the central bank. So, $100 billion or $40 billion in reshuffling up Wall Street, when they literally, BlackRock controls $7.6 trillion in mutual funds. Oh, come on. Are we really going to have a lengthy conversation?
No.
And I'm not talking here at Tackle Trading. I'm talking in like traditional news media about something that literally happens, Mark, you nailed it, every single quarter. Every quarter it happens.
Yeah, I read through that. There was a lengthy article that I read on a couple of different sites, actually. And I'm just like, really, guys, are you trying to guess a week before the rebalancing even happens that today is down because of some perceived rebalancing?
No, Tim, no, of course not. They're trying to sound smart.
Yeah,
that's what that's what lazy analysis is. It's talking heads trying to sound smart, to be like, oh, Main Street, we're so smart. We can talk about things that you didn't know existed, even though they exist every single quarter. No, this has nothing to do with the price, the market momentum today. That what is happening today is that an economy reopening up theme has a lot of cold water right now from a travel restriction coming out of New York and Europe, as well as increasing concern coming out of Florida. And that's one specific area of the market where it's showing some weakness. But it has nothing today on what is today, June 24th, has nothing to do on June 24th, the market down 2.7%, about how Wall Street is reshuffling funds. Nothing at all.
Mm-hmm. Oh, I don't think so either. I read that. I just shake my head. The whole morning I was drinking coffee and just kind of shaking my head like, really, guys, you're gonna blame the COVID-19 outbreak data. You're gonna blame rebalancing at the end of June. There's a lot of lazy analysis in the news here today. There's no question about it. Guys, I do want to talk stocks here, and there's several that I do want to unpack in terms of news headlines and all that kind of stuff. By the way, if you're watching our show, I'm really enjoying today's conversation. If you're out there and you enjoy it as well, give us a thumbs up. If you're getting value, if you're learning here today, we do appreciate your support. We appreciate you coming in and being a part of hashtag Team Tackle. There's a thumb button right there. We've got 51 thumbs up. Let's get that up to about 75 here. 25 people. I would love you for you to click that button. One thing I do want to make an announcement on, I don't want to forget about it, is tonight, and somebody who's a Team Tackle member, please help me out with this. Just type this in the chat. Tonight, 7 p.m. Eastern, Tyler Craig, The Art of Charting. He's going to be doing our Wednesday night webinar, Matt. He wrote the newsletter on that theme earlier in the month for the month of June at Trading Justice. There's information. You can find the actual event on the events calendar, or there's a bunch of information on it in the Tackle Today blog here today as well. So you could get the link and kind of the rundown on that from either one of those. Tyler's an excellent technician. And then after that event, Noah Davidson, Coach Noah, is going to be teaching our Step System Mastermind group for our traders who've gone through that and really learned about the systems behind trading and swing trading. Matt, we got a busy night here tonight at Tackle Trading, and there's no doubt.
Yeah, Wednesdays are becoming one of our bigger days. A lot of times we do our mastermind groups for the Step or Tackle 25 or bear market survival guide or cash flow condors, those premium systems that we teach and trade over there at Tackle Trading. So a lot of times we'll do a special, type mastermind group for those members. And then we obviously do our YouTube special every Wednesday night at 7 Eastern, where we have one of the coaches come on and, talk about something that they're analyzing on that week, right? And the bullish retracement theme has been dominant over the last week, and Tyler's going to come on, and one of the finest technicians in the market is Tyler Craig. And, I just get excited to, when Noah or Tyler or Gino, come on to teach one of those. So I'm excited about Tyler's tonight. And I always get excited over the Step System. I mean, Step System is my baby. And Noah Davidson does a great job of taking care of that baby. And then next week, guys, next Wednesday, mark this down, next Wednesday. I know we got a lot to cover between now and then, but next Wednesday, we will be doing our annual, Independence Day type webinar. And I will be doing that next Wednesday on YouTube at 7 p.m. So get excited and write that one down. We'll have some emails getting sent out to our Team Tackle to get you guys ready for that. And I'm looking forward to that next Wednesday as well. So Noah this Wednesday, Tyler this Wednesday, and I'll be doing the special annual promotion webinar that we do at Tackle Trader every 4th of July holiday. Celebrate independence, baby.
I'm looking forward to all these things. Definitely that next one as well. And, it's going to be an exciting week here at Tackle Trading. All of them are. There's no doubt about it. We got busy content.
Mark, can you get that on the schedule for next week, please?
Yes, I can.
On the events calendar? Yep.
And by the way, question from JT in the chat, Matt. I think you got a new fan here. He says you're the truth. I think he's talking.
No. JT was calling me out as a hack on CNBC earlier today.
But now he says I take it back. This guy is the truth. So you might have converted him.
JT, if anybody knows me for more than 5 seconds, they know I'm not a CNBC hack and don't support those idiots that go out there and just give headlines.
Yeah. And JT, subscribe to our channel. He actually says, are these classes free access or do they require a subscription? The stuff we do here on YouTube, we're doing that to promote our company and our community and also teach and educate the public the proper way about how to trade and invest. Those are free access. A lot of the stuff we do at Tackle Trading, which is in-depth content, just go get a trial and you can see what the subscription is all about. 15 days for free. There's a link in the comments below. And a lot of that is paid and the subscription access, to clarify your question there. Let's talk companies here, Matt. I want to start with
and real quick, JT, I say a lot. Like that's what I do in this show. I analyze a lot. You're going to agree with some things I have to say. You're going to disagree, and that's okay because all of Team Tackle supports one another. Doesn't mean it's like a family, JT. We're going to have our disagreements, but we're going to move forward together all the time.
Yeah. All right, Matt. Stock companies here. Dell. If we can start here, one of the only companies that's actually up on the market today. Dude, you're getting a Dell. I can't remember the last time I looked at Dell's stock, by the way.
This is not the first stuff we've talked about, but I mean, we just don't get a lot of questions on Dell ever.
No,
Ever.
they had some news today. They're going to try to find a way to unwind or sell their position in VMware. I did not remember. They have like an $80 billion position, Matt, equity position in VMW, which VMW actually I do look at a lot more often than I look at Dell. Begs me to wonder, Dell, why would you get rid of a company that actually has some growth potential, in that regard? Interesting news, Matt. I don't know if there's any trading action. When you read stuff like this, it's kind of like for me, well, okay, I'm going to avoid that stock for a while until they figure out the news here, because it kind of feels like something that on any given day you can just get random news headlines on. Do you guys agree with that, by the way? Is this an avoid?
Oh, from the very second you brought up Dell, I was just talking with JT and James in chat. I could care less about Dell.
I started looking at NBA news.
Dude, I'm not getting it.
Like,
Dell.
I want to
All
know
right.
what everybody in the halftime crew started doing once Tim started wanting analysts on Dell.
We'll have the Dell indicator. Some people got on Facebook. Some people text their friends. Some people asked, well, what am I having for lunch? Yeah, definitely a non-story for me. But what might be a story actually is Disney here. And I do
want
think
you to analyze Dell more.
Well, I think it's interesting that the company actually, one of the best things they've ever done.
Just kidding.
Is buy
Everybody
BMW.
here was kidding. Nobody was serious there. Like, nobody was.
And Matt, you know how great the team is?
Let me call
three
our
down
old
likes,
man
and said they got 3 down likes just because you said.
Thanks, Cody. I'm gonna call our father and get his take on Dell T.
Dell Computers. All right,
Yeah.
I gotcha. I'm just giving you the opportunity to make another joke.
No, you're testing my patience.
You can go for it if you want. Here's a story I actually do think matters, though. Disney in Florida, where a lot of that COVID-19 outbreak is coming back up. I did see that a lot of people who work for Disney are starting a petition, Matt, to tell the company, we're not ready to open. Look at this data. Look at this outbreak. Look at things that are happening. Workers for Disney sharing their voice saying, hey, I don't know if I'm ready to go back to work here, guys, and employee-employer relationships as this reopening stuff happens is going to be critical, quite frankly. And part of the reason, by the way, I do believe the Republicans want to put in a no liability clause in the reopening companies for a phase 4 deal, giving them some liability protection. But I don't think this is going to stop. I think you're going to see this from more companies, especially companies like Disney that run theme parks, deal with the public saying, hey, I'm not sure I'm ready to go back to work. Matt, story.
That's fine. I need a Bob Igor sighting to come and give these workers the rah-rah speech about how the entire world is going through a pandemic and everybody has been depressed out of their mind, and how we need to see happiness in the world, and how you have a responsibility to give the world the happiness they need in this environment. You are the front line of this fight and this war against the virus. The happiness that the Disney princesses and the Jedis give to everybody around the world. I need a Bob Igor speech on a soapbox, rah-rah to all of Disney, and that 7,200 who signed that petition would be like, hell yes, let's go make the world a happy place. That's what we need out of true leadership. Bob Igor, we don't have it. This is concerning about Disney.
February 25th, Bob Igor to step down as Disney CEO. April 12th, Bob Igor thought he was leaving on top. Now he's fighting for Disney's life. I don't know if he wants to be there, bro.
He's 62. He's had a lot of success in his life, and he just wants to hang out in his vacation home while he gets paid as the board of directors. But you forgot one date, late November, early December last year, Disney announces Disney Plus. Boom. Bob Igor leaves. Boom. It's just CEOs and leaderships have such an important role in the foundation and belief of the investor class believing in that company. This is not good news for Disney. Obviously, all joking aside with Bob Igor, 7,200 people, that work in Disney, and specifically a lot that work in Florida right there in Orlando, which is quickly becoming an epicenter of this virus, showing a little bit of concern. Does it have a bigger impact? Does it come to fruition? It's concerning at this point. What's more concerning is the same conversation we've had on these distressed areas of the market. The failure of these levels to really hold, the failure of the pivots to take hold. And now you're violating that support level. So, obviously the news is kind of what's giving the headline about Disney being down 5.5%. But concerned about Disney in the short term, concerned about Disney in the long term. That violation of support is legit to me, and you're probably a stay away from Disney until we start to see a little bit more evidence from an economic standing, but also specifically from a Disney perspective.
Mm-hmm. Yeah, I'm with you. You also had a
Matt,
couple.
I got a question from a friend. Would you buy Disney at 65?
That's usually your girlfriend. Am
No,
I giving your girlfriend advice here? I need to know if it's your girlfriend.
Well, I'm just asking for a friend. Would you buy Disney at 65?
I know who it's for. I know it's your girlfriend. Would I buy it at what price?
65.
Of course I would buy it at 65. But my God, yeah. If you give me Disney at 50% off, yes, I'm buying Disney at a 50% discount, and everybody else in the world should. Of course, the answer is yes on that. But are you also going to give me Apple at like 185?
I'm just looking at. I'm looking up. Hey, what do you think I spend my day doing when I'm not working for you? I spend my day looking at puts.
I hope it's not. Should we buy Disney at 65? Because that should be a yes.
It's his favorite. What are you talking about? That's his favorite thing to think about. Where would I buy this company?
Where would I sell a naked put on a company?
That is the way Mark thinks about markets. Yeah,
I know. I get it. He's the ultimate contrarian, buy the dip, lob naked puts, grenade launch. I get it. So grenade launch, another term at tackle trading, that is lobbing naked puts at a level that you don't want to take.
Kind of like the over the shoulder thing.
You do want to take ownership.
Yeah. No, you do. Right. But grenade launching, no. 65. Yeah, of course. If you're looking at a naked put, Mark, yeah, sell a naked put at 65, get your lunch money. And if you take possession, which is not going to happen, just take your lunch money. Yes, of course you would want to buy at 65.
You can pick up $30 for the 65 August, Marky.
Why do you think I told him to get his lunch money?
I know
what do you think I'm looking at right now, bro?
I knew what he was doing.
See, Mark loves days like today because then increases.
These are my favorite days.
Yeah.
Are you kidding?
Yeah, there's no doubt, because the volatility picks up. You can get more money and more premium for the naked puts on the companies that you were shaking your head off when the momentum and Momo was going crazy and they're up at the high. And you're like, okay, finally, I might get a shot. The funny thing is, Mark, I know these charts are ugly and that Disney might go to 100 or 80, but that's not a part of your analysis, right? You just love the action and the volatility coming back down. But those charts in the short term, very concerning. So you have fundamental conviction at 65, Mark?
Yeah, I do.
Okay.
Dude, the only way Disney isn't a good deal at 65 is if some really terrible stuff happens.
Nuclear holocaust, aliens invade and the end of the world is in the analysis. That's the only way Disney's not a great buy.
Listen, so it doesn't it's one of those things that the only way
I'd like to find the analyst who says Disney. I wouldn't buy Disney at 65. I like tackle trading. Disney goes to 65. How quickly are you buying at 65? Like everybody?
I mean, yeah, that's the process I go through when I sell a naked put. I never sell naked puts on anything that I'm like, oh my gosh, and what's the probability of getting put at 65? It's almost nothing, right? But you still have to go through that process. Am I willing to hold this for 5, 10, 15 till the day you die? Because you believe in the company and you believe in the assets.
Honestly, that might be Disney at 80 and not 65.
It might be, right?
Yeah, it might be. But the reality is Disney has some short-term economic weakness, has some short-term fundamental weakness, and obviously has short-term technical weakness as well. But Disney's not going to lose their brand awareness simply because we're going through what we're going through in the first half of 2020. I mean, it's not like my wife. It's not like my wife is like, no, I just hate Disney now because of COVID-19, right? It's just a matter of when do they come back. Disney's revenues will come back. Disney's movies will come back. There is legitimate weakness fundamentally and technically in Disney right now. That's why Disney is not one of those buy candidates. But at some point, I think Disney should be in a portfolio for the next 20 years. Like literally.
Why not 80, Mark? Why 65? Why not 80? 80 is the support.
Because he doesn't actually want to buy. He wants
then you
to get his lunch money.
Instead of getting a McRib, you can get a steak dinner.
The answer to that question is any individual investor only has so much money, right?
Mm-hmm.
And so you don't want Disney to be X amount of money and you want to add more. Let's say Disney went to 65 and then for some weird reason went to 50. You want to be able to have the ability to add even more. So it's like because it's not the only thing that I'm looking to acquire. Lots of things I'm looking to acquire on significant dips. And so it's just a matter of making sure that your portfolio is spread out, that you're not in one stock too much, and that you're not on a down day like today. Because a day like today, I get excited. Now, if I was over leveraged, if I had too much cash out, then I don't get excited on a day-to-day because I can't do anything. In fact, I'm stressed. It's like what Cody was talking about earlier on. Put yourself in a position that when situations occur, you have the cash and the availability to do something. And so there's a lot of factors that go into why 65 instead of 80 or whatever it may be. Hey, if Disney goes to 65, this whole market's at like 1600. Like, so.
Yeah. Real quick though.
I don't know about that. I don't
2200.
I'm not even sure of that. I think Disney can go to 65 without the market selling.
Because tech could hold up, and then market might be mixed. Yeah.
So basically, Microsoft and Apple would represent 38% of the index in that scenario.
Well, they represent 24. And that's a record number. I mean, yes, and that's why I said what I did, Mark. As long as you're seeing strength in that leadership of the market, the Facebooks, the FANG, and Kramer's had some hits and Kramer's had some misses, but you got to give Kramer a tremendous amount of credit for dubbing FANG. He does not get enough credit because everybody knew Facebook, Apple, Google, Microsoft, Amazon. Everybody knew those were great plays. But in I can't remember what year, it might've been 2013, 2014, but when he labeled it FANG, the entire market was like, oh yeah, let's get on board this. And every year they've been taking up more of the overall market cap. And it's the strength here today as well in the marketplace. So, with those 5 companies representing over 20% of the entire marketplace, I mean, Disney, what is Disney? The $130 billion company?
Good question. 220. 220.
Disney's about 1/7 as big of a company as just Apple is.
Yeah.
Right? But when I get put at 65, they're only going to be a $140 billion market company.
Yeah, true.
You're not getting put at 65, so
you're not getting put at 65.
So let's cease that part of it right
dream.
there. I mean, you could just take the $30.
If you
buy
truly,
a 6-pack
Mark,
of McRibs.
here's where I disagree with Mark. If Mark truly did want to take possession, if he truly wanted to take possession, he would not be lobbing a grenade at 65, which has zero probability of it getting to him, in my opinion. Okay. If he truly wanted, he would identify a support level on those weekly channels that he believes in, which would probably be somewhere between 80 and 90.
Dude, I like going to thrift stores. I like rummaging through all of the crap people gave up on to see if I can pick up some treasure at $2, right?
You be you, Marky. I'm with
Mark,
you.
Disney's not Hertz, bro.
Yeah.
So hey, Hertz is up to date, right?
We are not talking Hertz. No,
I have to.
We are not talking Hertz today. By the way, real quick, I do got to acknowledge one thing in the chat here. Josh Harris just signed up for the 15-day trial, but no login or confirmation. Josh, I checked just now. I think the email should just have gone out. By the way, brand new pro member, Team Tackle. Let's all welcome Josh. Say
welcome out, Josh.
Welcome to the pro members, Josh.
And Josh, if you ever have any questions, aside from bantering with my brothers, I handle all the customer service emails. So if you don't get that thing right away, send me an email at team@Tackle Trading. Happy to help you out, walk you through it, and anything else that you might need.
Yeah,
Josh, when technology breaks down, we have Mark to manually handle everything. He loves that part of it. He does love that part of it.
That's true.
Yeah.
All right, Matt, I know there were some upgrades, downgrades. Were there any that really grabbed your attention you want to talk about real quick? Just kind of to update the team.
Yes. I always like to update the team on some random things that Wall Street does that sometimes make no sense. First of all, Tackle 25 stock, Dick's Sporting Goods, gets its second upgrade in as many weeks here. Dick's getting a traditional upgrade to a buy. I forget the bank that put it out there. Dick's forming a little bit of a high base. Keep your eye on this company. If we do see a breakout here on Dick's, maybe a 42, I mean, we could see price appreciation into 44 by 47 and ultimately maybe test that 50 level. So do keep an eye on Dick's Sporting Goods, a really strong fundamentally strong company. Obviously, retail has taken a back seat, but this is a company in the retail space that has significantly outperformed its counterparts in this same type of space. Like the upgrade here, obviously, I'm going to like any Tackle 25 stock that gets an upgrade at a Wall Street. So I agree with whatever bank upgrade Dix. I do like this company. PayPal, Barclays, PayPal, PYPL, not a traditional upgrade here, Tim, just a price upgrade at Barclays. Price upgraded from 164. Now this is a price upgrade I can appreciate, right? Like that Tesla JP Morgan price upgrade last week from 240 to 270 was the biggest joke I've seen. But in terms of PayPal, currently sitting right there at about 175 when they did the upgrade, currently pinging at about 166, obviously down here, kissing off the 9 EMA. PayPal's price target at Barclays went to 199. I don't know why they just didn't go to 200. Like just round it up. Come on, that's what we all do. So 199 price target from the 164, 169 price threshold they did have. PayPal, keep an eye, momentum play, stay at home play. A pandemic play here, riding that 9, riding the 20. They're in between the lightning of the rising 9 and the rising 20. Keep an eye on how that plays out. I would love another down day here, to be quite honest with you. Get in between that rising 20 and the rising 9. A lot of evidence here when you get into that bull area. That gives a little bit of a buy signal. So keep an eye on PayPal. Nice little upgrade despite the fact that it's down 4% on the day. Square, another pandemic play type out there. Square here, price upgrade from 80 to 120. So a 120 upgrade. Now that was done at the worst bank in the history of mankind, Deutsche Bank. So take it with a grain of salt. It was Deutsche. And just to make you understand, that's Deutsche Bank over the last 10 years. In an environment where everything has done nothing but go up, 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 where we're increasing the balance sheets, where like literally everything, here's Deutsche Bank saying, let me lose all your money. But they did give Square an upgrade, and that upgrade is coming into price at 120. Morgan Stanley got an upgrade here today. Let's go back down into the daily chart very quickly. Morgan Stanley got an upgrade at a traditional upgrade to a buy threshold. The last major upgrade that I personally had, yeah, it does look like GE. That's what bad companies look like, James. But the last major upgrade I had was Google, and Google got a price upgrade. And again, traditional price upgrade. I like it. The bank's showing a little bit of courage here today. Google had a price target at 1425. Again, forgot to write down the bank. Price upgrade to 1775. So not only, like, I can get down, even if I disagree with it, I can get down with the bank looking at the current price and saying we expect price appreciation. Where the price upgrades drive me crazy is when they had like a price of 80, the current price is 120, and they adjust it to 120 just because that's where the price is.
Because the stock's already gone up. Yeah.
Yeah, exactly. Or the Tesla's debacle at JP Morgan from last week. Don't get me started on that. But, some legit price upgrades on Square, PayPal, and Google today, traditional upgrades on Morgan Stanley and Dix. A couple of the economy reopening plays that have just lost a little bit of its shine in the last few days. Cake gets downgraded as well, and that's Cheesecake Factory. And Royal Caribbean also gets downgraded as well. So a couple plays that were the traditional pandemic growth plays upgrade, that happened at PayPal, Square, and Google here today. A couple of your traditional economy reopening up plays, Cake and Royal Caribbean got downgraded today.
Yeah, love it, Matt. As always.
Quite frankly, Tim, and this is rare for me, there's not an upgrade downgrade that I can look at today and be like, I completely disagree with it. The only one is Morgan Stanley, but again, I hate all banks. So I have a very well-known bias against the banks.
Even the Deutsche Bank, just on principle alone, you should disagree with Deutsche Bank's analysis, right?
Listen, Deutsche Bank is what is it? A dead clock's right twice a day?
That's right.
Okay, that's Deutsche Bank, but somehow they're only right like 0.5% of the day. They're not even right 2 times out of the day.
Yeah. By the way, last section we're going to transition to here, Matt. I just dropped a link in the Zoom chat. If you can grab it and just go to that option theory blog. I just want to point something out. Tyler was on the show yesterday here. He joined us, kind of subbing in for you when you had the day off there. You had some family stuff going on. Tyler came in and did a good job. One thing we asked Tyler to do in the option theory blog was to break down the gold breakout and how he would play it with either calls, bull call spreads, and whatnot. He put that out here this morning. And so if you guys were watching that analysis yesterday, make sure that you review the option theory blog here today. I love Tyler's blog writing. I love the way he approaches content. He's going to be teaching tonight. He's one of the great coaches over there at Tackle Trading. So make sure that you do check out those blogs when they do hit the website. And option theory did just get posted here today. We're going to do final thoughts here if we can. And around the coach's corner, Marky, I'm going to give you first shot. What is on your mind? Last thoughts here for the team out there.
Oh, what's on my mind, right? Two things. I mean, because you separate the companies right now to tech, to your PayPals, to your Apples, to your Facebooks, all of that. You know, whenever you have a sell-off day, sometimes it can take a couple days, but a new pattern develops. Now, and once again, we never try to catch a falling knife. Because we don't know what the follow through will be tomorrow. We don't know what it will be the next day. And so you don't blindly buy. We train ourselves better. We adhere to technical analysis. But just like on any sell-off day over the last 2-3 months, a technical pattern could emerge in the coming days or week. So looking for those patterns to develop, and then just being patient on all this distress crap. There's a lot of companies that I'd really like to own at certain price levels, but the patterns are a total disaster right now, whether it's Boeing or Carnival or pick your airline. So just monitoring and looking for patterns to develop probably is going to be a bit, but that's on my mind right now as we close off the show.
Yeah. Maddie, you're up next. What's on your mind?
Tim, the same thing's on my mind today that was on Monday, really looking at these two major themes that really kind of developed over the last 3 months. The economy reopening up theme versus the pandemic, growth theme, right? That also includes the blue chips, Apples and Facebooks and Microsoft's, Amazon's, and so on and so forth. And what I'm really kind of focusing on is the same thing that was on Monday, and looking at these distressed areas and seeing if there is an opportunity in these distressed areas after that retracement that we starting to form 2 weeks ago, really kind of held last week. But, as I said on Monday, I was a little concerned with the economy reopening up theme and felt like the breakout pandemic theme was kind of where we were starting to see a little rotation. You're seeing further evidence of that today. Energy breaking its daily support levels. Industrial here threatening that daily support level on industrials. Real estate breaking down out of its 35-34 handle. Utilities breaking underneath its short-term support level. Basic materials breaking down underneath the 200-day moving average. So when you're looking at some of those sectors that are really that economy reopening up type theme, they're showing some, fundamental weakness over the last week, no doubt, but they're also showing some technical weakness here literally as we speak. So I'm going to keep an eye on that. If we see further evidence of money rotating out of this distressed area of the market into more of the growth pandemic blue chip play, that's what I'm focused on. I'm also focused obviously on the market. The NASDAQ holding its 9 EMA and the 20 SMA, the S&P 500 holding 3,000. As long as those levels hold, and then obviously in some of your more aggressive, areas of the market that have really shown the strength of the market in communications, making sure communications doesn't ultimately break its daily support there at 53.5. Looking at the technology play. Double tops, a little bit of concern, failed breakout, a little bit of concern, but that is just a little bit of a high base type forming. If we do see a breakout again, that certainly can be tradable on tech. Making sure this pattern holds and making sure it stays above that rising 20, I think is very important for the market. Looking at some of those discretionary plays, very similar to the communication plays, showing a little bit of hesitation over the last week, but ultimately still above its daily support levels. So, that's what I'm focused on this week. And I don't think that's going to really kind of change in the next couple of days. A couple stocks very quickly to kind of support that. A couple stocks off the reports from over the weekend. These breakouts that we saw confirm on Monday and Tuesday, like in Hubs, a lot of these breakouts, in Apple, in Microsoft, in Hubs, they're retesting those breakout channels. And if you miss the breakout, if these breakout channels hold, you certainly could look to re-up in that position. So having a stock like Hubs hold that 9 EMA at 217 is very important, because as long as 217 holds, it holds this breakout channel, which was the very reason you were looking at doing a swing trade or a short-term trade on Hubs in the first place. So as long as the trade is still doing what you initially analyzed it to do, i.e. stay above 217, you should still be in the trade. And if you miss that trade, and making sure that it holds that 217, maybe we get a doji tomorrow, upward moving of price, you might have an opportunity to get back in on that, flag based pattern that, comes into that 217. And that's just one example, but I'm seeing that a lot in a lot of these areas that, broke out initially. A stock that, gives me a little bit of concern here on that, but still bullish, is an energy play here. I still like a trigger above that, weekly high from last week, maybe above $100, as long as, Pioneer holds its support channel right there at 92. So I'm looking at that on the retracements, looking at TEL on the bullish standpoint, broke out very similar to what we saw in a lot of these breakouts on Monday and Tuesday, holding its pattern, holding its support levels. We obviously looked at Apple earlier today, Microsoft earlier today, same type of thing. Breakout, sets a higher high, shows a little bit of weakness coming into the midweek, but they're all holding its daily support levels or its trends or its patterns. So ensuring that those trends and patterns maintain in the next 2 days, I think is very important coming into the weekend. On the bears side, bears can win big in the short term, guys. And that's what I've been saying for the last week. As we've seen this retracement give a little bit of a pause for concern, looking at preparing for potential breakdown plays, and just, the last couple of days, look at Xerox, breaking down out of support. Look at DLX, breaking down out of support. Look at FISV, breaking down out of support, confirming here today. Look at HAS. A violation of support may be coming into tomorrow, the next day. Certainly could be shorted there as well. Looking at HCA, breaking down literally out of a failed bullish trend, double top, double bottom scenario, broke down out of a significant whole number of $100, closes underneath that $100. You could definitely see price depreciation, perhaps all the way down into the 80 level in the short term. Momo here, violating support. We've had Momo on a bear list for weeks, and now we're finally getting that one trigger that we've been waiting for, is that violation of support. We're seeing that on Momo today. MYGN, same type of thing. Bearish type pattern, low base, breakdown out of the low base. RGA, seeing the same thing. Bearish breakdown here. Looking at the CME group, bearish breakdown play, very similar to the HCA play. Looking at, and then Tim's favorite, most hated stock in the market is not GE. You would be surprised, but it's the NOC group, Northrop. The NOC list finally giving Tim some bearish momentum. So, it's always important to maintain that bearish watch list so that you're ready to make adjustments when you need to make adjustments. And what I'm seeing right now is three things. Number one, it's important to see those plays that are the strength of the market hold their breakout channels. That's number one. Number two, does the distressed areas of the market hold its daily support levels, or are they violated? Because if they're violated, it could get ugly. Right now, we're just showing weakness, but we're not showing bearish teeth yet. The bears are still in hibernation. This is just lack of bullish conviction in that distressed area of the market. But if they violate those support levels, watch out below. And then number three, some of these stocks that have not participated in the recovery have, that are now showing, not only, bearish type momentum, but, bearish momentum to the breakdown side. So to me, those are the three overriding themes I'm focused on the next 2 days. I think, those bear triggers on the downside, it's a good opportunity, in my opinion, in the short term.
Build your bear
two more
watch list,
things.
people. Yeah, go ahead.
Two
Mark.
more things. There's two bullish support things let's say the market sells off another 4, 5, 6, 700 points, 70 points on the SPY. You have a rising 50 that has not been tested in forever on the broad markets. So that, you know, and I was thinking about that rising 50 2 weeks ago when we had that sell off. I was like, oh, we might get a test of that rising 50, but you know, market rallied in that. And so two support areas if the market were to sell off tomorrow. You got that bank stress test that we didn't mention today happening after the market tomorrow.
I'm not sure it's after the bell. On the Forex Factory, it says 1:30. It might be actually during the market.
During the market hours. That would be very interesting. We'll confirm that for the show tomorrow on when that occurs. So you got a rising 50 and you got that bank stress test, which likely will pass. If that doesn't pass, well,
different analysis on Friday.
Different analysis. Assume it's going to pass though. So obviously you never know with an unknown event. So bank stress test, rising 50. Those two are two things that even if you get further sell off, could serve as a support bounce-ish type situation in the coming days.
Oh, and by the way, I love all of the analysis there. I just want to point something out. We got more thumbs down today than I've ever seen on our show.
I asked for down. 3. We got 4. You guys did better than what I asked for. Good job there.
Awesome. I mean, you got to get a couple of them in there. There's no doubt about it. If you enjoyed the show, I also do enjoy the thumbs up. I'm going to ask for those. I like the contrarian.
Drown out the negative thumbs.
Drown out that negativity. 3 charts, Matt. You nailed so many of them. I'm going to leave them just to these 3, just to add to what you talked about. My big thing for everybody out there, if there's anything from today, is take what Cody talked about earlier, take the lessons of what he discussed, learn about money management and trade planning, and take the emotions out. You got to have bear candidates. You know, how you play the market, you don't dictate when the entry points happen. When the market gives you signals, you should have a bear list ready. And so I think, Matt, just in that light, look at ICE. You know, we talked CME. It was on the report last weekend. Here's another exchange, ICE. I'll wait for that chart.
Hold on.
No problem. I know you're not men are not multitaskers. I get it.
I'm gonna analyze Dell real quick.
No, stop it. CME was one of my favorite breakdowns. We've been talking about it for weeks. Look at ICE. Kind of rolling. Same thing CME was doing. Like if you miss the CME trigger entry, I don't think you necessarily miss CME yet, but you might be able to look and say, okay, well, other areas within that same kind of type of company, here's ICE rolling over. I'm going to be watching that one, looking for confirmation or a breakdown from there. Look at General Electric. You said it's not my most hated company. I beg to differ. It also breaking down here today. Talk about failed reversals and the reopening theme. This company is still a terrible company.
I get it, but all the manipulation BS we see in the market and just outright just buffoonery. GE is somehow your most hated company.
It lies about its accounting. It's run terribly. Don't get me started.
Welcome to the market. They lie about their accounting. Can I introduce you into non-GAAP earnings? Can we have a discussion on that?
No, we can discuss the healthcare rollover. Look at Medtronic, MDT. I think some of the best breakdowns right now are in healthcare. You nailed a few of them, Matt. I think there are other signals that are developing in healthcare stocks right now. Quick last peek at MDT, if you can. Same kind of thing. I'm seeing a lot of charts in healthcare like this, guys. You know, there's strength, there's weakness, there's both in this market. Markets are holding support on the broad level, but if the markets do turn down, Mark, there will be opportunities. There's always opportunities to trade, no question about it. Guys, that's our show, long show here, but a very, very fun one, action-packed and a lot of analysis to get to. A couple last things, Matt, just, you know, promote our company, promote our trial. If somebody's out there watching right now, they're not a member of Team Tackle yet, what's the 15-second elevator pitch?
15-second elevator pitch. Become part of a great community of like-minded investors navigating this market together. Get access to our scanner reports, over 14 different webinars we do on a weekly basis for our pro member community. Get access to technical analysis 101, options 101, system development 101, and futures 101, which are basic educational. Get access to our playbook, which are video and written guides on the strategies we apply in the the market, what rules, delta, time frame rules, so on and so forth, and see what we're all about. You can test that out for 15 days free. If you like it, stick with us. If you don't, thanks for testing us out and giving us a try. And as always, guys, for those of you who are just kind of, dabbling at this, dipping your toe in a little bit. We put out a lot of tremendous free content. Obviously, click the like and subscribe bell on YouTube. We go live every day for the halftime report, but we also put out videos every single week. And latest count, I believe we have over like 1,300 videos on YouTube, 3-minute videos, 5-minute videos, and obviously our long form halftime report. And then obviously on Wednesday night, we do an educational webinar every single Wednesday night. So stay with us on a daily basis as we break down the markets on a daily basis. Wednesday nights, we do an educational webinar. And then obviously, go and check out what our pro members love about tackle trading. And that is our pro member community that you can get a 15-day free trial on.
Love it. Guys, we're out. We'll be back tomorrow to unwrap whatever's happening in the market like we do every day. We'll see you then. We're done.